Hello and welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at the live trade room, and we're about to trade the US Open fully live and interactive for you. So we go through the whole process of identifying high probability trades. We'll be identifying the directions and more importantly the reasons why we're looking for opportunities in that particular direction, and we'll be discussing where we're looking to get in and looking at the technical background to each and every trade that we look to get into. And there's a few interesting trades this afternoon, so we'll hopefully be able to capitalize on those. We've got some big news events as well as the day is going to unfold, so we'll touch upon those in just a moment. Just quickly, those of you that are perhaps interested in learning how to trade the financial markets from a position of knowledge and understanding, we can certainly help you as an organization. We've got a wealth of products and services available to traders just like yourself, all at very, very low cost in terms of a monthly fee. So do go to a website. You can speak to anyone at the team through the chat function there if you like, and it's thelivetraderoom.com. I should know our web address off by heart by now. So yeah, go to our website and we'll be happy to talk you through what we can offer those of you that are perhaps interested in day trading, but also those that want to trade part-time, that perhaps only have 15 to 30 minutes daily available for learning a skill like trading these financial markets. Okay, so let's get straight into it then. We'll start with a risk warning. Please take a brief moment to familiarize yourself with our risk warning currently up on screen. Don't forget, when you trade financial markets, it is about assessing the risk, and it's about understanding what type of reward you'll get from that risk, and that's what we try to specialize in doing. Okay, so what we want to begin when we trade these financial markets, we want to have an understanding of any news events that are likely to impact some of our decision making. As you can see up on screen, what we have here is we've had some CPI inflation data out impacting the Aussie dollar. So less than expected. You can see these. This is the actual news event. This is the middle column is the forecast. And on the left-hand side, we have the actual data being released. So less than expected on the inflation side. So there's a lot of concerns with central banks on, this growth picture in terms of increasing inflation. As a result, will it lead to central banks looking to increase interest rates and increasing the cost of debt as they do? Plus, they'll be unwinding or tapering a lot of their quantitative easing programs. And that's really what will be, I suppose, a significant focus really for the Fed, the FOMC this evening at 7 p.m. UK time. So we'll have the FOMC statement, we'll have the funds rate, which is expected to remain at 0.25%. And we'll also have Jerome Powell with his regular press conference. So just to give you a bit of context to this news event, for central banks, it's probably the main central bank event, certainly in the month. So it's worth taking note of a lot of the sentiment that comes out of this news event and the price action, of course, as well. Now, there'll be a strong focus on the fact that we are entering this growth environment. The US have done very, very well indeed in terms of their vaccine rollout. By far, the most successful rollout, largely due to them, claiming the vast majority of the vaccines. So it does help if you actually have the vaccines to distribute. So the rollout is performing really well. Economies are coming online. Talking about state economies in the US, so they're all coming online. There's pent-up demand. There's been phenomenal amounts of quantitative easing, and we've had the COVID relief package, where every American's received $1,400. The next round of checks is $1,400. So a lot of that is designed to be spent in the real economy. So that creates a bit of a problem for central banks, because if inflation starts to tick to the upside, and we'll have a look at the 10-year note in just a moment to see how the bond markets are reacting to this type of environment. It can really give the Fed and the FOMC a decision to make. So that's really whether they start to taper their quantitative easing. So they're pumping lots of cash into the system. At some point that will become counterproductive. So they'll need to start tapering, just start to unwind some of the big spend. We have the Bank of Canada last week reduced their bond buying program by about 25%. So that's the first major central bank to make that decision. Let's see what comes out of the Fed later on this evening, and that may be the next catalyst for moves in these markets. So with all of this in mind, I'd like to just share the 10-year note just to show you what's been happening over the last few days. So we've seen a little bit of an uptick from the lows around the 154 level. We're now up at 163. So a considerable uptick. Let's look at the 5-day chart. You can see we've been down at these lows, and there is an uptick, and this is the 10-year note as well. So it's important to take that into consideration. Good afternoon, Finbar. I hope you're keeping well. Sorry, we're a little bit late starting this webinar this evening, but we've got plenty of time now before the US Open at 1 p.m. So we'll get an influx of cash entering these markets at 1 p.m. UK time. So the bond yield is just ticking to the upside, and that's a little bit of a concern for the equity markets. And we shall have a look at those now in just a moment, just to show you what's happening. It looks like we're just about to get that continuation move to the downside for the dollar CAD, which is a trade we're already into the downside. So it looks like we're getting a close. We're still in a strong level of support and resistance here with the dollar CAD, but we are certainly more bearish than we are bullish. So that's good news for that sell trade. Going into these trades, it's always really about being a little bit patient. Previously, or let's go back a couple of years, you could get a 3, 4, 5% return on your investment in any one particular trade. Now we're running into sort of market conditions where we're needing to be a little bit more patient than that. So we very well may need to carry trades over for a couple of days before we go through these long periods of sideways moving price action, and then we get a major move followed by further sideways moving. So it's just the nature of these market conditions that we need to be mindful of. Yeah, so Finbardi, the dollar CAD, we've got that 1 hour range. This is the 1 hour range. So just to give you a snapshot, really over the last couple of days, it's done nothing but move sideways. What does it look like on the daily time frame? The momentum is very clearly to the downside. We've got a little handle in here, the 124.18, and we've broken even on the trade, so we don't have any capital exposed in this market, and that's always objective number one when we trade markets, is to remove risk as quickly and as kind of as safely as we can. We don't want to unnecessarily expose capital if there's no need to do so. So objective number one is cleared, but will we get this little breakout of this little low down here? What is it, the 123.82 level? That's the question we want to ask ourselves, because if it is, then we'll get another move sort of 20-30 pips further lower, or we're likely to do so. We have this market moving from top left to bottom right, so we're seeing a series of lower highs and lower lows. So this is a definition of a downtrend, and we're looking to continue that. So we have the weight of the market behind us, which is really quite important. And it's really our preferred style for trading these markets, is to try and get the weight behind your trades as best as you possibly can. Okay, we're just looking at a few other markets just off screen. So we come back to the dollar CAD. It's certainly worth looking at for that further continuation trade to the downside. We just see how it's performing around these lows. So there is still a sell trade again below that 123.82. So we're very close to that level as we speak. Now, the one problem we have this afternoon is the FOMC. So we're always a little bit cautious about any major price moves in the build up to a major event like that, because it might be buy the news, sell the fact, or vice versa. So you would want to just adopt a little bit more of a short-term view of these markets between now and 7 p.m. this evening. So, i.e., if we do get into a trade, we'd want to be looking to book in profit over the next few hours. And we can see how much some of these markets have been moving over the last 2 days, and it's really not very much. So we do need to take that into account and just be smart about these trades and not be frivolous and burning a couple of trades for no real reason. So if we get continuation, we get follow through, so we can take this high in here, the 77.50 level in the Aussie dollar. I'll show you what it looks like on the daily time frame. So we spoke about, in fact, you see it up here, high probability structural failure buy trade around the 77.80 level. So what happened was we continued that move to the downside, but very much the reversal trade to the upside can still very much exist, and that's really what we'd be looking to get involved with at this level. The good news is we can take this low as a stop loss, so if we get a close above 77.50, we could have a 25-30 pip stop loss perhaps in this, and we would have the potential for let's say a 2-to-1 risk reward where price is pushing up to these highs once more. So that's what's available. Will prices get up to there between now and 7 o'clock? Not so sure. What we wouldn't want to do is to get into a trade now and hold it and hold the risk as we go into that news event. So we would want to avoid doing that. So we'd want to either cover the position and book in whatever profit we have at that point, or to at the very minimum mitigate risk on the trade, and not expose our capital to major potential volatile swings in these markets. So this is our trade plan then from last night. So we were looking for the euro yen to push to the upside. We'll just get that out of the equation now. That was from a previous session. So we're looking for we'll change the yen pairs to the daily time frame. So yesterday we had a really strong constructive breakout to the upside. Now prices are just stalling around those highs, and that's really okay. That's not a massive problem. The pound yen, as you can see, we're looking for yen weakness, and we're not really getting the opportunity to the upside just yet. In fact, there's a little bit of softening creeping in now, so we'll see which one wins out. I do have our squawk on, I believe. So we'll see if we get any market updates now shortly. So looking at the US dollar, it's worth just having a quick look at the markets like the S&P 500, just the US indices markets. And what we can see from this market here is a lack of volatility over the last few days, and we were talking a little bit about this last week as well, but we're in a sideways drifting market condition. So when we consolidate, that generally means we can be a little bit patient. We don't need to be jumping in and out of these sort of erratic swings. It's probably worth noting that we have a series of highs just sitting in at this market, just up at this level. And in the last 3 trading days, we've got lower highs, followed by potentially lower lows. If we break a little bit lower, then we might get this little rollover trade to the downside. Now, on the daily time frame, we've actually got a pending order sitting in at these levels. I'll put PO for pending order. So we want to catch a little bit of weakness on the bigger time frames if we start seeing come into this market. It'd be relatively short-lived. It'd be looking to capitalize on ultimately our bias is to the upside, but short term we can look for a little bit of short-term selling, and what that means is we can mitigate risk as quickly as we can on the trade and just see how far these markets can push to the downside before they find a little bit of support. So equity markets not really doing an awful lot, still relatively close to all-time highs, so that must be acknowledged as well. We've got a bullish day in the FTSE market. Very mild price action in the DAX. So these trades are not really jumping out off the screen at us, and that normally means we should probably be a little bit patient with some of these, not be too anxious to get into them. Don't forget, timing is an important part. You can often, and you may have experienced it a few times yourself, where you do your analysis and the opportunity's there, but you might accept kind of a poor quality setup to get into that trade, and you might experience getting stopped out maybe once or twice, but then perhaps the third time or the second time you get into that trade, then you get the move. So really that's the right trade that you should be getting into, but perhaps the wrong time. So timing is important as well. It's something that's probably not covered that often, and there's certain indications that we can use, price and volume, to just help us with that decision making. And we often talk about the run up to a trade. So if we have a strong level of support or resistance, what we want to see is prices build up a bit of momentum as they get to that level, and then if they break through, you could expect continuation. So if it's dribbly, if it's like this, if it's just drifting sort of higher, and you're not filled with any confidence, if prices break above, then you're probably not that confident on a very significant continuation. You can expect further grinding, and those types of trades are okay to get into as well, but they're just not necessarily going to be valuable, worthwhile trades to any great extent. So let's just have a quick look. We're just approaching the US Open now. There's very little to get too excited with. We're sort of in these slightly more longer term sideways moving patterns. We saw a little bit of dollar strength so far in the trading day. Now the US Open is about to kick in. Let's see if we do get these rollover trades to the downside, whether this dollar weakness trade is as genuine as it appears to be. And don't forget, we do have the FOMC shortly. The Aussie dollar is just backing off this level in here. We would like to see a close above that level, and we failed to see that close again. So again, we can probably be a little bit. Let's have a look at the daily time frame for the New Zealand dollar. So there's an argument that suggests, maybe we can look for a buy trade in this. It's not that much clarity in the move, to be fair. And I think there's, broadly speaking, there's a bit of a question mark over the US dollar at the moment as well. So it's almost threatening to weaken further, but it's not really quite happening just yet. So maybe patience really is probably more important for the dollar right now. Plus we've got a few dollar trades that are just ticking away in the background, like a dollar CAD trade to the downside. So let's see if we get any kind of continuation on these trades. It might be worth looking at a bit of a pullback trade here on the Euro Yen, maybe a structural failure trade to the upside for the pound yen. Let's see where gold is at. It's just really correction, and we spoke, this is a level of resistance in at these levels, so it's actually conforming as per that expectation. It's just rolling further to the downside, and if we get back to that 1758 level, so we're only $6 or $7 away from that level, then we can expect a little bit of buying maybe come in at that price, and that might give us the pullback trade. So we're currently pulling back off the highs. Our bias is now clearly to the upside, so maybe around that 1758 level might give us a decent buying opportunity. Again, we probably just need to be a little bit patient with it. So crude oil to the upside is probably giving us the most coherent trade. And I say that with So we've generally got this kind of market condition now where we've been up and down a few times, and now we're just up at these slightly higher levels. We've had a couple of rejections around these prices before. OPEC was very much underwhelming yesterday. We were supposed to have the conference today. They brought it forward a day because of coronavirus concerns, apparently. So all we are really at the moment is just at the top end of a potential sort of breakout trade at this little range, and I suppose going into OPEC, you know, there was a decent high probability buy trade at the 61.80 level. It's that sort of reversal, bit of price action really at these lows. It's just those OPEC meetings can be actually quite volatile. In the end, they didn't really turn out to be that way, but they can do. So it's probably worth just erring on the side of caution and maybe even get in on a bit of a pullback at some point. So then we've got the equities, which are not really giving us much to work with. So US is marginally negative. European and Nikkei Asian stocks are marginally positive. When you do have that sort of mixed bag type of approach, it probably means that you know, we don't really have the correlations in place for big moves in those markets. So we'll revert back to our trade plan then from last night's webinar, looking at some further yen weakness really is the play, and I think it's worth keeping an eye on some of these. So we'll have a look at the dollar CAD to the downside, the Aussie dollar to the upside. We'll have a look at the yen pairs as well. So there's the 123.82, just at that little low. So we're very close to that level as we speak. We're already in this trade to the downside. So if we break out to the downside, we'll be definitely looking to start booking in profit on this trade, so we can use the 24.17 as a level which would be only exposing capital unnecessarily if prices did reverse. If we break to the downside and we close below that level, if it started to reverse and push higher, then we'd only be exposing that much capital unnecessarily, so no real point in doing that. So the dollar CAD to the downside, we'll keep a close eye on that. You can see the, whoops. So you can see that we've got this level just sitting in here. So close to a breakout to the downside in that market as well. Well, let's see if we get further moves lower. So we're getting that move there. So let's look at the Aussie dollar. So just to track what's going on, it's quite as you can see, it's quite a range bound sort of up and down type of market, isn't it? So we want to kind of bear that in mind. So that's the market condition. We do have sort of a lower high just sitting in here, so that this is a good technical place for a stop loss, and this is the pullback trade. Ideally we'd like it a little bit higher, but it looks like we've pulled back to a much lower level. So we would have liked that, but what we're looking at is potentially that. So if markets extend their lows like this, they're still worth considering, purely because we're now able to buy at a lower price. And that's what you should be looking to do. Buy these markets at the lowest possible price that you can. That's coherent and that makes sense. And you want to sell at the highest possible price. So that's why when we use support and resistance, if prices break through a particular level, an important level, then we look for the next level for that market to interact and behave with. And then we might be able to make consistent decisions at the next level. And it does mean we can often get a little bit more value for the trade. So again, it's just pulling back off that high. So, oh, sorry, this is on the hourly. Let's go into a bit of a smaller time frame. You can see even at the smaller time frames, it's reluctant to do so. So this is when we identify a level like this, the 7750 level, which is an important psychological level just in its own right. So we get the confirmed break above it, and then we wait for the follow through, and we don't get a follow through. Prices pull back, they attempt that level again. Fantastic, we've now got the confirmation that we need to the upside. Do we get the follow through? No, we don't, and it's heading back to the downside. So I mean, this is what technical analysts do. They assess market condition. They have sort of certain criteria that need to be fulfilled, and if the market fulfills that criteria, they'll engage with the trade, and if it doesn't, then they won't. And that's really what we look to do. So so both of these are actually mini rejections of the highs. So it doesn't mean that there's no buying opportunity, it's just not yet. So once we get the close above and we get the continuation close above, then that now would be the trade to get involved with. So what we can do, so we can actually just change the price at which we look at a high probability structural failure buy trade around 7750 now. So we're looking at getting into this market 35 pips lower than what we were looking at yesterday, which is fine, which is absolutely fine. And we'd have a stop loss at 77.26. So we're talking about a 26, 27 pips stop loss, somewhere around that, maybe 30 pips stop loss. And we've definitely got 30, 60 pips to the upside. So a positive risk reward for us in this trade once we get the go ahead. Very quickly, what we talk about structural failure trades is when markets are, when you clearly define a low in this market and you clearly define resistance levels. So this is a strong level of support, this is a strong level of resistance. You can see that happen time after time. Every time prices get up to this level, it reverses. It might happen again now, but when this market does give us the confirmation to push higher, then that's your high probability buy trade.
ECB Governing Council member Centino now speaking in a webinar.
And that's your structural failure trade to the upside. And that's what it means.
Finance Minister here commenting on digital tax in a tweet, saying that China signals support in talks on digital tax.
So the dollar CAD, we're getting quite close to potentially prices breaking below the 123.82. Will we get a bit of positivity maybe going into OPEC? The market that's probably most primed for an opportunity right now is the dollar CAD to the downside and the Aussie dollar further to the upside, and perhaps crude oil as well. So we were looking for yen, further yen weakness, and it looks like as if the yen is just taking a little bit of a pause, but that's really all it is. It's nothing more than just a light pause. So hopefully we might be able to get into the Aussie dollar now in just a second. The buy trade above 61.80 level, so we're nicely above that. Let me tidy up this little. Looking at this on the smaller term time frame, so we're up at these highs. There's your momentum high. All we're really doing back is just having a little bit of a pause. There's a strong level of support, but you can see the sideways moving nature of this market since last night. It's been moving sideways pretty much, but absolutely the bias is definitely to the upside. Now, below that 133.34 level does constitute a structural failure now to the downside, but it's likely to find a little bit of support before getting that next leg to the upside. So, on the daily time frame, we've been drifting sideways for a good month, as you can see. So that constitutes, all of this price action. It's been up and down all the time, but the market condition is sideways moving. And only yesterday did we see the breakout to the upside, so we can easily expect a little bit more upside from here. So we've actually got the same price action in the pound yen as well as the euro yen. So you can see that price action there. It's virtually mirror image. And let's see the dollar yen.
For me, sometimes the reflection is far more present than the thing being reflected.
Certainly not over such a long period of time, but so we are in this sideways moving phase, just largely during the European and UK market open. So our bias across all these markets is still to the upside. We just need the price action to kind of follow through, really. Okay, let's convert these to hourly time frames. We're in exactly the same boat.
For me, sometimes the reflection is far more present than the thing being reflected.
above 63.25. Let's look at that on the bigger time frame. Just see what's going on. So we've had a little bit of a breakout of this little sideways moving pattern. Yesterday we had a little bit of a break followed by a constructive pullback, and recently we've just had this market just ticking higher and is pulling back. So maybe an opportunity to get in actually at the 63.25. Might not be a bad trade. It's just a race against time now for the FOMC this evening. Bless you.
Comments here from ECB Centino saying monetary policy is expected to remain very accommodative.
And that's the thing from this, from these central banks is they're likely to be dovish. They're likely to keep rates lower for longer. They're likely to maintain their bond buying. You know, we've had the Bank of Canada literally pull the trigger last week on tapering their bond buying, but it's not widely expected that the Fed will do the same just yet. So So what I'm going to do is I'm going to put in
So we're moving into 10 minutes now until the bottom of the hour, and we get Canadian and US data. I will lead with Canadian data. Retail sales month on month for February, we're looking for an increase of 4% on a prior negative 1.1%, the range 3 to 6%. With ex-autos month on month, we're looking for 3.7% on a prior negative 1.2%, the range 1.6 to 5.7%. US wholesale inventories month on month, prelim read for March, we're looking for 0.5 on a prior 0.6. With the advanced goods trade balance for March looking for a deficit of 88 billion on a prior revised deficit of 87.1 billion from a deficit of 86.7 billion. Looking at the note here from TD on Canadian retail sales, they look for retail sales to rise by 3.5% month on month, slightly below the market consensus and flash estimate for a 4% advance. They say retail activity will receive a tailwind from the rollback of emergency health measures across eastern Canada, which should see Quebec outperform on a regional basis. They say motor vehicles will provide a source of strength, leaving ex-auto sales up 3%, with the market looking for 3.5%.
So we're attempting to sort of rally again to the downside. So it's so now we've got these prices just pushing up to these levels. We can take a look at these levels and see if we get a close above those prices. Then we'd want the continuation trade, and then we can pull the trigger and hopefully book in profit between now and the FOMC tonight at 7 o'clock. Okay, so we might be able to We're already in the dollar CAD to the downside, so we'll be looking to add the Aussie dollar to the upside. So we're actually seeing these prices just break on screen below that 23.82 level. So let's just see the close, see if it's below that level, and then if you get follow through, then there's your high probability sell trade. And you got a nicely defined stop loss as well, the 124.16. So you're looking at 30, like a 40 pips stop loss for this trade. So the Aussie dollar is just doesn't want to close above that level, 77.50 level. So that's why we've identified that level as a high probability level. And the reason why we trade support and resistance is it stops you from getting into trades unless you can close above them if you're looking for a buy trade, or they close below if you're looking for a sell trade. Unless they do that, there's no trade there. So this is a good example of a bit of patience in the Aussie dollar. You know, we failed to get the close above the 77.50, and now it's rolling back further to the downside. So unfortunately, we have to back off it and just not too eager to be jumping in. You could argue same with the dollar CAD, but the CAD is looking more aggressive, and we can look to get into the pullback trade in the crude oil around 63.25, but we can also look to trade the Canadian strength against the dollar, and we could do that below the 23.82 level.
So we're moving into 3 minutes now for this data. Canadian retail sales month on month for February, we're looking for an increase to 4%. Ex-autos month on month, we're looking for an increase to 3.7%. US wholesale inventories March prelim read for the month, we're looking for a decrease to 0.5, prior 0.6. With the advanced good trade balance for March, we're looking for a deficit of 88 billion.
Just kind of an observation. when we trade the financial markets, each market that we look to get involved with or to engage with, we have a certain sort of criteria to get in, and if it fulfills the criteria, then we'll pull the trigger. And if it doesn't, like the Aussie dollar, then we won't. And we're not going to be we want to get out of the frame of mind of just taking a chance at that level. And what really helps you, because you can get false breakouts to the upside as well. But if it meets the criteria and you get into the trade and then it gives you a false breakout, then at least you've stuck to, I suppose, the criteria for you to get into the trade. But if you haven't, and you're just preemptively just getting into that trade below a level of resistance just because you think it's going to kick on to the upside, and if that rejects, then you really start kicking yourself with a bit of regret, because you knew you should be getting in above the 77.50 level and you ended up getting in at 77.45, for example, knowing that it's a level of resistance. So just avoid that sort of mental anxiety about
just
trading.
Just under 1 minute now,
if you can. Look to get in. If you plan to get in above 77.50, unfortunately, it's a case of just waiting for that opportunity to come to you. Because we always talk about, when we trade, we always talk about the markets needing to perform as per our expectations and not the other way around. So we're not saying, oh, here's a market that's moving, let's jump on that, let's get into that buy or sell trade. That's not really how profitable traders trade. They have their markets, they know what they're looking for, they can identify, they have a means in which to get in, they have a means in which to get out, and that's really what you should be trying to work towards. And hopefully, this trading for the vast majority of traders is a very logical process. Criteria needs to be met.
4.8% better than expected. Ex-auto on the month also coming in better than expected, 4.8%. Seeing wholesale inventories on the month 1.4%, with the advanced good trade balance a wider deficit of 90.6 billion. Also seeing US retail inventories on the month coming in a negative 1.4%. Just to recap that, Canadian retail sales, both ex-autos and normal month on month, at 4.8%. Wholesale inventories month on month, real and read for March, 1.4% from the US on an expected 0.5. The advanced good trade balance coming in wider at a deficit of 90.6 billion. Seeing some revisions there to the wholesale inventories on the month, prior revised to 0.9 from 0.6. Also seeing here, the US Trade Representative Catherine Tai on Wednesday said that her agency will help create a united front of US allies on trade issues and use trade policy to boost new clean energy technologies and communities of colour. We'll put these full comments on the board from the US Trade Representative.
So we've had some core retail sales figures. They are monthly figures, but it shows a decent uptick in above expectations, so that's really good for our dollar CAD trade. Let's see if we get that flush to the downside, though. That's the key. So it is at the bottom of the hour, guys, and I do apologise. We were a little bit late starting this session this evening or this afternoon. One big problem for us is we have the FOMC between now and 7 o'clock. So what's that, about 5 hours? And in our experience, more so over the last year or two, we've seen a lack of volatility during this period, in the hours prior to the FOMC, and it probably does make a lot of sense, because the last thing traders want to do now is to commit to any particular bias, directional bias to the upside or to the downside. Not necessarily right now put money where their mouth is, but to save, I suppose, their capital and their time and effort for when the market is likely to be flooded with capital, and to be able to benefit from moves accordingly. So Will these markets continue to move sideways? We don't know, but they're likely to continue moving sideways. And the yen as well could be in the same boat. We might get a bit more weakening, a bit of softening creeping in, which would be fine. And then FOMC, we'll see if the Fed are as dovish as... we'll see what the state of the US economy is like, if the Fed will be forced to perhaps tapering their bond buying, or whether they'll be forced to consider bringing forward the timetable for rate increases. At the moment, it doesn't look like that's going to be the case. They're going to be quite dovish. They're going to adopt that dovish view, and that will be just sort of wanting these markets to just continue as they are, and then we might start seeing the equity markets push higher, perhaps the dollar to continue to weaken. So we are sort of loosely positioned for, a dovish Fed, keeping things as they are for now, and assess things further down the line. That's pretty much what we're expecting will be the case. But any major news headline, can cause an awful lot of volatility in these markets, and we've seen it so many times before. So look, we're going to have to wrap it up there, guys. That's our trade plan currently up on screen. Looking to sell the dollar CAD below the 23.82, looking to buy the Aussie dollar above that 77.50 level, and only if we get a close above that level will we get in. So a little spike and a rejection does not sort of tick the box for us. The pound yen and the euro yen are in the same position. We're drifting sideways. So it's that breakout above the 131.62 for the euro yen and the 151.32 for the pound yen. Crude oil, if we get a pullback to 63.23, could be a decent buying opportunity around that level. And we're probably not going to see an awful lot more from the US indices markets today. And as a result, we may not see much moves across the dollar pairs and the yen pairs. So let's see what these markets give us. But in our experience, we wouldn't be that hopeful for really big moves. But as always, these markets can really surprise traders, and we might get a particular move in these markets in the build up to that. So we'll kind of have to obviously wait and see, but just keep an open mind really at this point. But those are all the levels at which we're interested in these markets. Currently up on screen. If there is any questions, let us know. I'll be happy to answer any questions that you have. If not, perhaps give us a thumbs up, subscribe to our channel if you can, and we'll notify you when we go live, and also when we post. We've got lots of content as well to go up, hopefully sooner rather than later, so you'll be notified on those. So look, on that note, thank you very much for joining us. We'll be back again tomorrow around midday, so if you can join us then, that would be fantastic. And we shall see you tomorrow. So from everyone here at the live trade room, best of luck for the rest of the afternoon. It doesn't look like we're going to get much to work with, but there might be one or two opportunities there. Tomorrow is probably likely to be a lot more volatile off the back of FOMC. So let's see how we get on, and we'll be back live tomorrow at 12 noon. So from everyone here, do take care, and we'll speak to you soon. Bye for now.